Holy flippity flip flop flapping smokes, everyone. We are about to witness a huge commercial real estate crash. In 2008, we had the subprime mortgage crisis for residential real estate, but I think what's going to happen in 2023 is we're going to have a commercial mortgage-backed security crisis. And the reason why you have to pay attention to this is because the banks have made billions and billions of dollars worth of loans to these commercial landlords and these commercial real estate owners, but commercial real estate is now crashing with a lot of people working from home or doing flexible working options. They may work in the office 2 to 3 days a week and then work from home 2 to 3 days. With a lot of businesses going online and going digital, this has meant there's been less and less demand in most areas, not all, for commercial real estate. And ladies and gentlemen, we just got massive news today that one of the biggest commercial real estate landlords in the US has just defaulted on an absolute mammoth mortgage. So the reason why we have to pay attention to this is because this is just one company defaulting now, but this, I think, is going to lead to a domino effect. As the prices fall more and more and more, we're going to see more and more commercial landlords defaulting, and this is going to have a big hit on the banks and also a lot of insurers that insure these mortgages, and we may see domino effects throughout the whole financial system, just like in 2008. So everyone, who defaulted? What is going on in the commercial real estate sector? And why should we pay attention? Well, that's exactly what we're going to go over in today's video. So let's not waste any time. Let's get straight into the news, the facts, and the data. Okay, look at this, everyone. Pimco owned office landlord defaults on, listen to this, $1.7 billion mortgage. So there's an old saying that goes, if you owe the bank $1 million, that's your problem. But if you owe the bank $1.7 billion, well, now it's the bank's problem. Now, this is such a big risk, and I don't hear any people in the finance YouTube space talking about how the commercial real estate sector is going to lead to a financial crisis or could lead to some huge effects on the economy. So let's dive a bit deeper, everyone. The buildings in San Francisco, New York, Boston, Jersey City, and New Jersey are owned by Columbia Property Trust, which was acquired in 2021 for $3.9 billion by funds managed by Pimco. And listen to this, this is why this mortgage is so dangerous. The mortgages have floating rate debt, which led to rising monthly payments as interest rates soared last year. So this is something many people may not be aware of, is a lot of these commercial loans actually have floating rates. They actually have adjustable rate mortgages. And while people are saying, well, it's fine because everyone in residential, they have 30-year fixed, while with a lot of these commercial loans, it's not fixed for 30 years. It may have a floating rate or adjustable rate. And what we're going to see is a lot of these landlords that said, yeah, I can afford this mortgage at 3% interest rates, 4, maybe even 5%. Well, what happens when mortgage rates get to 7 or 8%? That's right, everyone. We're going to see more and more defaults just like this. They say, we, like most office owners, are addressing unique and unprecedented challenge currently facing our asset class and customer base. We have engaged with our lenders on restructuring of our loan on 7 properties with our large national portfolio. We look forward to a collaborative process yielding thoughtful solutions that reflect current market conditions and best serve the interests of all stakeholders. So that's right, did you hear their last statement? In interests of all stakeholders. Because if this company defaults, they're not just going to lose, the banks are going to lose, okay? And also the insurers are going to lose. So if this commercial real estate trust does go down, this is going to have domino effects across the whole banking system. And of course, Bloomberg reached out for comment, but Pimco declined to comment. Now, why I've been covering that house prices are starting to drop now, specifically in the US and much more in Australia, what many people aren't aware of is actually how much prices are falling with commercial real estate. So listen to this, everyone. US offices, particular older buildings with fewer amenities, have struggled in recent years with the rise of remote work during the pandemic and recent layoffs. Values of those properties have fallen 20% since the onset of the pandemic in March 2020, according to Green Street. So that's right, everyone. These properties have already crashed 20%. Now, why this is so significant is if we start to get more declines with interest rates going even higher than they are now, so you better believe there's going to be more declines coming, well, then that means some of these commercial real estate loans could start to go underwater. If prices fall 30%, a lot of commercial real estate trusts may put 20-30% deposit down to secure these properties. So if prices start to fall over 30%, you're going to have a lot of these loans, like I said, underwater. The 7 buildings owned by Columbia Property Trust were appraised at $2.27 billion in 2021, according to loan documents, on a 485 million commercial mortgage-backed security that financed part of the debt. So like these mortgage-backed securities in 2008 that caused the subprime mortgage crisis, we could have a commercial mortgage-backed security crisis coming very, very soon. Goldman Sachs Group Inc., Citigroup Inc., and Deutsche Bank AG funded the original debt of almost 1.9 billion. So can you see why I'm trying to tell you how important this is? We're seeing some of the biggest banks in the US are backing these loans, and this is just one company. Imagine if we have dozens of companies default, which I expect will happen. We're going to see massive losses for the banks, everyone. And this is how we know it's really bad, people. Representatives for Goldman Sachs and Deutsche Bank declined to comment. A spokesperson for Citigroup didn't immediately reply to requests for comment as well. So if everything was fine, they would obviously reply and they'd comment and say, no worry, nothing's wrong here. You know, we've lost $1 billion here, $1 billion there. You know, that's just chump change for us. Well, I don't think that's the case, everyone. I think they're facing serious losses and they know there's serious systemic risk with commercial real estate and they don't want to spook the public. Now, on top of this, we're not just seeing issues for commercial real estate, we're seeing massive risk for the US residential market as well. So look at this, everyone. This is absolutely crazy. US home purchase applications dropped to 28-year low. Hello, did you hear that, everyone? US home purchase applications are down to a 28-year low. This is something we have not seen for decades. That should tell you how bad things are going to get. I think this crash is going to be different from 2008. Yes, borrowers are a lot more qualified, but simply with the way interest rates are going up, with the way house prices are, the math just doesn't make sense. It doesn't make sense to buy right now. It doesn't make sense to invest in real estate right now because the numbers don't make sense. We're going to have to see a massive correction for them to start making sense again. The Mortgage Bankers Association index of mortgage applications to buy a home is up more than 18%, the biggest drop since 2015 to 147.1 in the week ended February 17th. But on top of this, we're starting to see the mortgage rates tick up again. The contract rate on a 30-year fixed rate mortgage jumped another 23 basis points to 6.62%, the highest since November, and the rate on the 5-year adjustable rate mortgage also increased. So I think the banks are starting to get the picture here that interest rates are going to be high for longer, and they're going to go even higher than the current market is pricing in. So that's why the banks are lifting their mortgage rates, and they're lifting them aggressively. Because listen to what Jamie Dimon has to say on what the Fed is doing right now. Jamie Dimon says the Federal Reserve has lost a little bit of control of inflation. Now, while we have to take everything Jamie Dimon says with a grain of salt, because he obviously does try to manipulate the markets a bit, I think he's right somewhat here. It's just that I don't think the Federal Reserve has lost a little bit of control of inflation. I think they've lost almost full control. And I think Jerome Powell looks really silly right now because he just came out in his last meeting says, guess what, guys, we're starting the disinflationary process.
I guess I would say it this way. We can now say, I think, for the first time, that the disinflationary process has started.
Nick Manat.
That's right. We had CPI come in at 0.5, we had PPI come in at 0.7, and we're seeing inflation surge again. So everyone, let me break this all down for you in very simple terms so we can all understand, and so you can share this with your family and friends, and so they can understand as well. Because the banking system tries to say it's too complicated for you to understand. Don't even worry about it. Don't even think about it. It's just too complicated. What is happening right now is commercial real estate is crashing, and it's just going to get worse with high mortgage rates. This is going to lead to massive losses for the banks, also massive losses for the insurers, and we could see some contagion effect throughout the whole financial system, just like in 2008. This on top of the residential housing market crash, which has been more resilient than I thought, but it's just a matter of time. House prices have to correct because the numbers don't make sense. And on top of the Federal Reserve still being behind on inflation, and nobody's even wanting to think about the unthinkable scenario of what if inflation gets out of control and we have to go to 7-8% interest rates? Well, that will be absolutely catastrophic, and we'll see more of these adjustable rate mortgages as these commercial landlords have. They're going to simply default. So everyone, I don't know about you, but I wouldn't even think about buying a house right now unless you absolutely have to and if you can afford it. But if you're thinking about investing in real estate right now, I have a $10 million holy smokes NFT to sell you. So everyone, it's definitely time to prepare right now. Do whatever you can to start hoarding cash, because there is going to be some absolutely life-changing opportunities coming over the next 1 to 2 years. And for those that have prepared, you have absolutely nothing to fear. But everyone, what do you think about this? Let me know down below. Now, for my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you all in the next video.